Palantir Technologies has been one of the most talked about companies in the stock market during the past few years. The company built its reputation by forming a close partnership with the United States government, especially in areas related to defense, intelligence, and security. At the same time, it has expanded its presence in the commercial sector by selling data analytics and artificial intelligence solutions to businesses around the world. A major part of this success comes from its artificial intelligence platform, which has been adopted by both government and private clients because it allows organizations to process enormous amounts of data and make decisions much more effectively. This growth has been reflected in its stock price, which has surged by an incredible 380% during the last 12 months. For many retail investors, this performance has created the impression that Palantir is nearly unstoppable. Even though the company has been on a winning streak, challenges are beginning to appear. One of the biggest concerns is the increasing amount of competition in the artificial intelligence and data analytics space. Palantir has long enjoyed a dominant position when it comes to national security contracts, but another major player is now looking to challenge that dominance. Salesforce, which has become one of the most recognized names in the world of business software, has set its sights on this same area. Traditionally, Salesforce has been best known for its tools that allow businesses to connect with customers, improve communication, and increase sales. Its software provides companies with ways to manage their marketing efforts, streamline customer service, and better understand consumer behavior. Over time, Salesforce has built a strong reputation as a company that helps businesses become more efficient and more profitable. In recent years, Salesforce has also been heavily investing in artificial intelligence. It has developed digital agents that act as a virtual workforce, which businesses can use to automate tasks and improve productivity. This expansion into artificial intelligence services shows that Salesforce is not satisfied with its existing market and wants to expand into new areas. The most recent move that has drawn attention is the creation of a new business unit called Missionforce. According to Salesforce, Missionforce is designed to provide tools that will help soldiers and supporting organizations operate more effectively, more quickly, and with greater efficiency. This is a direct response to the success that Palantir has enjoyed in the national security sector, and it signals that Salesforce intends to compete in an area that has been one of Palantir's strongest foundations. The announcement of Missionforce may appear at first to be only one additional product line for Salesforce, but the reality is that this could grow into a significant challenge for Palantir. The comments from Salesforce Chief Executive Officer Mark Benioff highlight this competitive tension. Benioff openly stated that Palantir's software is the most expensive enterprise software he has ever seen. This remark indicates that Salesforce may see an opportunity to compete directly on price. If Salesforce is able to provide software that meets the needs of government agencies at a lower cost, it could pressure Palantir to reduce its prices or risk losing contracts. While Palantir has been able to expand quickly because of its unique capabilities, the entrance of a large and established company like Salesforce creates the possibility of price competition and profit margin erosion. From the perspective of investors, Palantir remains one of the most exciting stocks to follow because of its rapid growth and high visibility in the artificial intelligence sector. However, the company's financial valuation is a point of concern. Palantir currently trades at a price-to-earnings ratio of almost 600, which is extremely high compared to the overall market. Such a high valuation leaves almost no room for error. If Palantir experiences any slowdown in earnings growth, the stock price could fall dramatically because investors are paying such a steep premium today. It is also important to recognize that Palantir is not a small or niche company anymore. With a market value of around $424 billion, it is one of the larger companies in the technology sector. Salesforce itself is worth about $230 billion, which demonstrates that the two companies are closer in size than some investors may realize. Because both companies are large and influential, any shift in strategy or focus could have wide-reaching effects in the market. Salesforce's move into national security with Missionforce is a perfect example of how quickly the competitive landscape can change. For long-term investors, the biggest risk with Palantir is that the company has already been priced as if its growth will continue at the same extraordinary pace far into the future. But no company can grow at an accelerated rate forever. Eventually, growth slows down as markets mature and as competitors enter the space. When this happens, Palantir's earnings could level off or even decline, which would cause its price-to-earnings multiple to fall closer to more typical levels. If that adjustment occurs suddenly, investors could see a steep drop in the stock price. While some investors might view that as a buying opportunity, those who purchase at today's inflated levels face a significant amount of downside risk, It is also worth considering that increased competition in the artificial intelligence and data analytics sector is almost certain to continue. Palantir may not lose large numbers of customers immediately, but over time, competitors such as Salesforce could take small portions of the market. Even a small erosion of market share can have large consequences when profit margins are thin and when valuations are based on the assumption of constant high growth. If Salesforce and other companies manage to create competitive products, government agencies and businesses may demand lower prices from Palantir. This could reduce its revenue growth, squeeze margins, and ultimately weaken its profitability. The lesson for investors is that while Palantir has been one of the hottest stocks in recent memory, it is not without risk. The stock's incredible run during the past year has made it popular with retail investors who have enjoyed rapid gains. However, it is dangerous to assume that the stock will keep climbing without interruption. Sooner or later, a correction is likely to occur. When that correction happens, it will test the conviction of investors. Those who believe in Palantir's long-term potential should be ready to add to their positions during periods of weakness, but new buyers entering at today's price levels must be aware that the stock is vulnerable to sharp declines. Essentially, Palantir Technologies has surged over the past year with its artificial intelligence platform driving both government and commercial growth, but the company now faces a new challenge as Salesforce enters the national security space with its Missionforce unit. Salesforce, known for its data analytics and customer management software, has been expanding its artificial intelligence capabilities and aims to provide cost-effective solutions for defense operations, potentially undercutting Palantir on price. With Palantir trading at an extremely high price-to-earnings ratio of nearly 600 compared to Salesforce's 35, the risk of overvaluation is significant, especially if growth slows or competition increases. While Palantir remains a popular stock with retail investors, its inflated valuation and rising competition suggest that future volatility and potential corrections are likely, making it a stock that could present buying opportunities only during pullbacks. With that being said, I will see you in the next video.